Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, November 11th, 2020. What I'm going to do is a quick update on a lot of the things I've been focusing on lately, and that would be, of course, the broad markets. We'll start there. QQQ, SPY, NASDAQ 100, ES, NQ, NASDAQ 100 futures. We'll look at coffee. Definitely want to do an update there. I want to do an update on gold and nat gas. I've actually left that out in the last couple updates, but there's still some potential bullish developments there to note. Starting out here on NQ, okay, yesterday I laid out some targets. I mentioned 1155, 11555 as support. I also mentioned giving a little room. This is what they do. You almost have to bank on support levels being briefly taken out. You can see this is these are bar charts. I go here to candlesticks, and you can see, and that's why I talk about 60-minute candle closes. If you zoom in nice and tight, or make sure you watch the videos in full screen mode. There's on the bottom right hand chart, if you're not aware, bottom right hand of the video, right hand corner that is, there's a little box, and that box, with four corners, little framed corners, that's the full size mode, and it should fill your monitor. You can see there was that dip below, but you can see the candle close back above there, and that's why, again, give it a little room. This is what they do, they being just market forces, algos. That's if it's a well-watched level, you're gonna have some stops placed there so they can run it down, clear those stops, and then move on. So anyways, that is by all accounts a successful defense of the 1155 support, and now we just hit the first target. I had this here as an arrow break on that 60-minute chart from yesterday. Arrow breaks are where reactions are likely, and that's exactly what happened. You can see we ran up, had a reaction, we stalled there, pulled back, and then boom, took it out with a big green candle. That's it. That's confirmation of a breakout. Once we took it out, we remained above there, and now boom, hit the first target. Simple stuff. That means this is where reaction's likely. I can actually give you, and I wanted to do this, one other level just above it that could carry up. So we might want to do this as a target zone or resistance zone up to about, these lines are now so close, you have just one big three lines of resistance. And again, what I laid out yesterday, this would be pretty much my minimum target that's now been hit, near term max target there. And again, there could be more than that. I'm just having my short-term glasses on right now, just looking at near-term stuff, get these trading opportunities, get 2, 3, 4% on a short-term swing trade, get out, and let the dust settle. The elections are over. The winner's been called. I know there's a lot of noise about the Republicans trying to challenge that. I and most people don't think it's going to change the results. Maybe it'll change things going forward in the future. Who knows? Who knows? I think that's noise, and I think I said this before, that it's noise that will continue to abate as time goes on. You'll hear less and less about it, is what I suspect. I don't think it's really going to change anything, from the election's point of view. We'll see. However, I'm just, the daily charts, I'm going to get to that here in a second. You've got some mixed signals there. So near term, since yesterday, I'm still favoring a near term bounce. Just looking at that for now. We hit that minimum target. By all means, you want to take profits. That's, what is that? I think about 2% or so. I'm just drawing a line here. That's about a 2% line, 1.93 if I can grab it. Off that level, no, we're about 3% or so. Okay, I'd have to grab it there. Having a hard time, but that's about a 1 day 3% gain. Active trading all day long. You take a 3% gain in a 24 hours. I've tried to extrapolate that out. You're not going to do that every single day, but averaged out, that's 15% per week. That's not even compounded. You're talking 60% per month. So that's what active trading is all about, getting in and out, hit and run. It's like swing trading, just in fast forward using shorter term time frames. It's no different from what I do on the daily charts. I'm going to get to some daily charts here. All right, with all that being said, first target hit. Also remember, I gave you, on the post this morning, a pullback to support. Remember, if you are targeting a pullback to a support level that's at 11, rounded up to the nearest point, that's 11,687. You don't wait to buy at 11,687 because a buyer stepped in early. You step in a hair early, and that's exactly what happened when it reversed. So you had a opportunity to add on, and then you had that quick thrust up. Likewise, if the resistance level I expect a reaction on is 11,835.75, then I'm going to sell hair early. But again, we have the momentum going, and I think there's a decent chance we can come up to either maybe at least this next target right now today, 11,893-ish, we'll call it. So bottom line, either take your quick 3% and run, or set a stop, raise your stops to protect profits, and you might get let it run, see if you can get a little more out of it. If if it pulls back, you get stopped out, you're out of the trade, but you're still in for a profit. You just give a little bit back. It's up to you. But either way, there's a reaction. Since I started the video, we've already had a reaction off that level. Moving on now. Oh, and as I mentioned this morning, something that keeps me just kind of short-sighted right now. Here's that 60-minute PPO trend indicator. I'm putting a line at the 0 line there, and bullish when above, and I'm looking at the white line, the 9 EMA. So there's a bull trend, successful defense. That line often acts as support or resistance when tested from above or below. So boom, and then boom, right here it flipped the trend indicator to bearish when we crossed below. So it said, be long and strong all the way up to here, and then at this point, about right here, actually back here, flipped to bearish, and it's still bearish. So there's the intermediate term indicator. So not to be confused with, I made it very clear. The short term, I'm looking for a short term bounce, but as far as the intermediate term trend goes, that's resistance, and we can get rejected here. The PPO can get rejected, turn back down, and the NASDAQ 100 could easily take another leg down. So what do you want to look for? These recent lows, they were defended, they were support. We got the expected reaction, or at least small bounce so far off there, and that helps to validate that. I pointed out support here yesterday. We had numerous reactions since to help validate it, and so that further increases the odds. If we get an impulsive breakdown through there, it's going to be a sell signal and take us down to this next support level here, about 1128. QQQ traders, I haven't forgotten about you. I'll get to that in a second. I know I spend a lot of time on NQs. Again, and I've said it a dozen times. I like to trade it just because it's round-the-clock trading. I can go to bed, put a stop-loss order to protect my downside. It might get taken out 3:30 in the morning, so I know I'll go to sleep. If there's a huge move against my position, whether I'm long or short, I have a stop loss that's going to be triggered, and I'm not going to wake up to a massive gap down that may bypass a stop at QQQ. Now, the other reason is these are round the clock trades here. This is showing the Globex trades, virtually almost 24/7. And therefore I can pick up a lot more trend lines, a lot more support resistance levels that show through from those trades that occur outside that 9:30 to 4 p.m. regular trading session. The QQQs, a regular session, is only 6.5 hours. There's 6.5 hours in a trading day, and almost not a full. They shut the futures down a little bit each day briefly, but almost 24 hours of trades there. So that's that. All right, enough on that. Let's move on. This is ES. We're zoomed in a little. We're still in the 60-minute time frame, and I could give you some potential bounce levels there. And I also told you that it was my expectation NQ would outperform, which it most certainly has. I think it's like a 3% bounce since yesterday on NQ, NASDAQ 100, and maybe I think about a 2% bounce or so, if that, on ES. So, but there's ES. If you want to trade it, you still have a trend line as a potential resistance level or target if you're targeting that. You broke above the 335.59 level today. We're almost back testing now. Little minor trend line there. It should hold, and I think we'll get this one more thrust up to at least that 35.88 target today. So if you're swinging ES, there's a near-term target for you. All right, let's look at the index ETFs, and we'll get to coffee, natural gas, and gold. SPY, there's a 60-minute chart. There's that gap backfill I mentioned the other day as a potential pullback target, about 350.19 or so, and I'm referring to the big old gap there. So that was, like hitting the easy button. It was no guarantee. I'm not going to sit here in hindsight and say, oh, well, it was guaranteed, but it was a very, very, very logical an objective place to step in long. Traders, especially a big gap, gap that size, it's hard to miss. And so that's where they stepped in. And so far, if you stepped in and bought the gap backfill, you're up about right now almost 2%. Nothing big, but certainly something an active trader will take all day long. And then on QQQ here, we'll measure out the bounce right there. There was that 280.32 target or support level I pointed out. So there's a bounce, yeah, about 3% in the Qs. So as I mentioned, quite a bit more strength in Qs. Oh, and also look, there's I think I mentioned this yesterday. 288.30 was the top of that gap. That was a resistance. So there's another reason. Even if you only trade NQ or only trade QQ or even only trade SPY, ES, they're all both large cap indexes. Watch them all. In this case, QQQ and NQ happen to hit those resistance levels at the same time this morning, and you can see that candle we pulled back. So there was if you're a really active trader, you wanted to book profits, there was a nice chance to book profits. I think we'll probably power on up through there, continue to see some more upside for now. And now I just showed you on the NQ chart the 60-minute trend indicator, but remember, you're going to see different things on the QQQ chart. This is also a 60-minute time frame. However, I point out there's two levels on the PPO I watch. The zero line, which is that dashed white line there, often acts as support and resistance, defining the trend, and about the negative 0.5 level. Because sometimes that will actually define the trend. So either way, right now the PPO line is turning back up at the 0.5 level, whereas the zero line, the one I put a little more stock into because it's the last of the two to cross, therefore you get less whipsaws, that's back testing the zero line. So this is potentially bullish. If this can curl up here, then that's going to keep the near-term bullish trend intact right here, at least this trend indicator, and we could see QQQ continue on. There could be more to go. So trade it as you want. One strategy, especially if you're not a very active trader or swing trader, and you're bullish on the market right now into year end or wherever, at least for the foreseeable future. Trail up. I laid out some objective entry points here yesterday, and you could trail stops up and maybe hold out for new highs on the NASDAQ 100. There's certainly, if the market's going to continue to new highs, I know that the big tech has underperformed lately. There was a rotation out when that whole vaccine thing hit, but this market is unlikely to go to new highs. I'm talking the NASDAQ 100. The SPY hit them the other day and then gave it back up, but we're unlikely to power on much above the recent highs without big tech finally kicking back in, the big FANG stocks. So there's a potential trade for you. And again, set a stop, trail it up. There's dozens of ways to trade. But I just wanted to point out the levels. You can see them there. And then bigger picture on QQQ, again, highlighted this morning. Highlighted yesterday first was at 283 level. We were below it in the morning, and I said so far, as of now, and that was early in the trading session, we're below there. That's bearish. You had a follow-up red stick to the bearish engulfing. But I also cautioned the day is very young, and all that matters to me, all that matters is how a daily candlestick closes. From trading a daily chart, this is common. You see an intraday, it was early in the morning, we broke support, but we rallied back up, closed right above that support level, 283. And so support was successfully defended. It doesn't matter that you had an intraday breach, just like you had it there. A lot of these candles, you can see the skinny part, the shadow. That's what happens intraday, went through there. But back here, that line 283 held on a closing basis. And then it broke right there. See your first red candle with a body below it, a solid close below it. Back tested right there on that second candle, right? So that's a support broken. Support once broken becomes resistance. We back tested, and then boom, we had a correction because support was taken out. Right here, we gapped above, regained it, closed above it. That's bullish. So breakout, back test, TA 101. You buy a pullback to support, or you wait for support to break to short. That's it. So that's where we're at. SPY, same thing. Yesterday I mentioned the downtrend line for SPY on the daily chart. We gapped up, big impulsive breakout right there. That was the day of the vaccine news, and so a breakout, a back test, as pointed out yesterday. we had almost a perfect back test. You can see the shadow, the skinny part of the candle, and then started to and rallied and closed above it. So a successful back test, closed above it, and follow through today to the upside. So from this perspective on the daily chart, I'm going to say nothing but bullish. One thing to note, I did point it out, is we have with that high yesterday, that breakout, that new high that we put in on at least that day on the SPY, it put in negative divergence. And although negative divergence is not a sell signal, it is a heads up. And you guys know, and I've gone over this 100 times, these divergences play out much more often than not. Now they can continue to build. SPY can make another new high, but anytime soon we're going to still have that divergence, and that increases the odds that the breakout's going to fail, and we're going to see a trend reversal in the coming weeks here to months, depends. It could be days. That could be it. I mean, we put in the divergent high, so I am on the lookout, and that's still why I'm focused in short-term mode right now. I'm on the lookout, and very much open to the possibility that marks a significant top right there. Not saying that it did. We'll only know for sure in hindsight, but there's enough evidence right now to say that's certainly a possibility. There was a minor uptrend line there. I just drew it. Anyways. All right, let's. Okay, so leaning towards a little more upside today in the indexes. That's it. Coffee, jail. I'm going to start. I'll go over a few different charts here. I'm going to start with KC Coffee Futures. Now, if you've been following this one, I've been using a 120-minute chart lately on KC. Interactive Brokers has rolled. Coffee Futures are rolling this week. Just a heads up, we were on the December contract. So if you're saying, Randy, this doesn't look like your chart before, on this charting platform, they decide when to roll. They roll earlier. I think on investing.com they're still using the December contract, but the Interactive Brokers here is rolled to the March contract now. And so what that means is the levels are different, the price levels. So here's my 60-minute chart. I had to replicate it. I'm trying to refresh it here. There it is. And the salient features on this chart are the same. That was this bullish falling wedge that I pointed out recently, the divergent low that's been building. Started pointing it back here. Said we can continue to make marginal new lows and still keep that divergence intact, and we have. And then finally we had a buy signal recently right here on this breakout above the bullish falling wedge, thrust up, put in a higher low, and now a higher high today. So far so good. I had a level that was hit yesterday. It's not on this chart here. It was a level was right around there, and that was taken out. And so here's some additional targets that I put here. But I'm looking at this one with the potential for a longer term swing trade. I want to say that. So I don't have any plans to take profits at this point in time at any of these levels. As long as this chart continues to firm up, we get away from there, continue to move higher, keep these divergences intact, and that's it. So I still think a stop, not too far below the recent lows. At this point, we've broken out. We should run. Look, if we go down again, we're still going to have divergence. I'll just leave it up to each of you. If you're a near-term trader, active trader, just looking for a short-term pop to one of these targets or the one we already hit, yeah, you want a much tighter stop. If you're a longer-term trader, investor, you can give a wider stop. I'm going to jump over to the longer-term charts here in a second. Let me just update Joe for those that don't trade futures. This is a 60-minute chart of Joe, the coffee ETN. Yeah, we had this uptrend line here. Remember, it will do a good job, but not a perfect job. This is trying to track and roll those coffee futures. Now, coffee futures a little more hands-on. You need to roll them. You need to pay attention to that. You have to be aware of the trading hours, which are quirky. It shuts down middle of the day, opens up later in the day, trades through the night. It does not trade. The coffee futures don't trade with the regular session. And you're also going to note that in Joe that it stalls out around 2:30, I think it is, in the afternoon, and seems to go nowhere. And that's because it's trying to track futures, and they stopped trading then for a little while. All right, so where are we going with it? Positive divergence. This is a 60-minute chart, even though I was on the 120-minute chart of the futures. Similar thing, 60-minute candles here instead of 120-minute candles I'm using there. There's our downtrend, our similar wedge pattern. There's our breakout, and we're walking higher now. Still potential targets. These same targets I've laid out in multiple videos recently, but similar technical posture. Positive divergences, wash, rinse, repeat. You get in the rallies. Negative divergence tells you heads up, you're probably going to get a correction, which we did. Negative divergence, correction, especially when you get the trend line break. I always say divergence isn't a sell signal because you had divergence there and you kept going up. You extended it. Finally, you broke down below trend line support just like you did right here. So those are your, stop loss orders or short entry if you want. Sometimes I'll tell you, sometimes I'll start building a position when you have strong divergence and clear, a bullish pattern like a falling wedge or something. Take an initial position and then add to it on a breakout. It all depends on the security and other factors. What do the daily and weekly charts look like? Let's talk about that now. All right, this is a daily chart of Joe. What stands out probably the most is a couple things. Well, this right here, big positive divergence that showed through not just on that 60-minute but on the daily. Just like you had bullish divergence here, this is the last time we went long on an official trade on coffee right there. I threw it out recently as an unofficial trade, but official, unofficial, it's just a matter of me managing. I've been so behind on the official trade ideas. I just haven't, they're stale trades. I'm just doing these videos, trying to keep fresh ideas and updates coming out to you guys. I think that's the most important thing. Make it clear where I think these things are going, give you price targets, give you, whether I have high convictions, medium or low convictions on a trade, that kind of stuff. But that was it. First, second, third targets hit, and then that ended with negative divergence, and there was a trend line break. So these are, these are the swings in coffee. Look for the divergent lows, swing it long. Look for the divergent highs, swing it short or get out. Look for the divergent lows, swing it long, etc., etc., etc. Not most importantly, but let me look at the, let me show you coffee from a couple different perspectives. Let's start with a daily. I'm go to my daily chart here, roll it up so it should be centered in the video right about here. Okay, so you're looking at coffee futures. This is from stockcharts.com. They give you the end of day. If you see when you're using stockcharts.com on their futures, you see EOD, that means end of day. That means they only, each candlestick shows the end of day close, not intraday trades. What do you have here? Simple stuff. I mean, really simple stuff. All these are divergence lines here, positive divergence. So you had divergent low, rally, divergent, and of course trend lines to break out. Divergent low, could almost build a position there or wait for a breakout. Divergent low, breakout, rally. Divergent low, breakout, rally. I mean, come on, that's easy stuff. It's not 100%. You can't bet everything on it, and that's what stops are for. But so far, when you look at the most recent one, the one that I've been showing you on the, with the other coffee futures and the on the 60 or 120-minute time frame, here it is, our most recent divergent low. Wash, rinse, repeat stuff. So I think this is the catalyst for the next leg up. Also take a note here that coffee's been making, the futures have been making a consistent series of higher lows so far. Need to take out this high right here to say that we're in a new uptrend and likely that a new bull market has started. You can't really say much more than that, but you can clearly see these rips, and these rips are very lucrative. They're all well into the double digits. So that's the daily chart. Bigger picture, and the reason I've been staying with coffee, updates for months now, is this. Going all the way back, I mean, it was actually early last year. I pointed out this divergent low. You don't get them often. This is a weekly chart. This is going back decades, into the early 2000s here. And you look for these divergent lows, positive divergence. You look for these divergent highs, divergent high, divergent low. These are your bigger trend trades. You can call them long-term swing trades or trend trades or investments, whatever you want. And that's the kind of stuff I look for. So you swing the big trends like this, divergent low, you caught that. This is, you can see the returns there. That's a 620% rally up to that divergent high. Divergent low, I didn't measure it there, but it's a heck of a correction off that divergent high. From that divergent low, coffee rallied 125%. And then going back to 2019, right here, we had a divergent low and a breakout right there above the downtrend. At that time, from that divergent low, I was calling for a move of 60% to my first target, then a move up to 90. I'm still calling for, this is all part of this because we broke out, we've been making those higher lows. And so this is longer term stuff, and this helps formulate my thought why I keep looking for, you know, the next leg up after a correction in coffee. Why I've been swinging it up, getting out when those divergent highs tell me to. We hit that 60% target, for a 61% gain. So that would have meant that from the day I put it there, calling for that, it was roughly 60%. I think we went just a hair lower, then broke out, and we had the expected reaction that took us back down. We had a correction off that first target being hit, and being that it's already been hit, that to me says if we get another thrust up at that level, it's still resistance. We may get another reaction there. It's about $1.40 on coffee, and yeah, I think we'll take it out and then move on up to that next target, which again from this point back here was 90%. I think now it'd be about 60%, 70% from where we're at right now if it's hit. So that's my longer term outlook on coffee, and if you're looking for a longer term swing trade or trend trade, that's what I'm looking for right there. And if that gets taken out, by the way, I had another potential target here, all the way here, this dotted line, I can't even see, it's about 230 right there. So maybe something along these lines, run up there to that 170 level, get a reaction, and then ultimately all the way up to 230. That'd be a big move. As you can see, it, simple math, that's more than a double from where we're at now, 110. And if it fizzles out and moves lower and takes out your stops, so be it. That's trading. There's no guarantee it's going to do that. I'm just showing you what I think it's going to do and how to trade it and when to let it go. Right now, it tells me to be long coffee. Okay, next up, gold. Not giving up on gold yet. We've started to, we hit that those previous reaction lows. We're at 1852. We took out the trend line intra period there, intraday, but then regained it quickly. Started to rally. Nice or big reversal. Not nice if you're long. I'm long, but still long from the other day. But still above there. Remember, this was a support we hit the other day, and it's still support. If it breaks, that's not going to be good. It could open the door to move down here to 1817. But as of now, we're still above where we hit the other day and that little spike, that intra-period spike. So if coffee can rally off here, then what that is a second successful defense. I think I need to zoom in. I know you guys, I forget watching the video, you don't see it as well as me. There it is. So that's it. This is what coffee looks like. That's where it was pointed out as a buy the other day. I'm sorry, gold, not coffee. I need to drink a little more coffee, get my brain a little sharper. That's it. So it needs to hold that level, especially not anything much more than an intra-period brief dip below that low the other day. Better if it can hold above it and still maintain swing target of the trend line and or that 914 level a little bit above there. Trend line, at this point the trend line is going to come in first if and when gold can reverse here. So not a trade I'm completely in love with. BPO's crossing down, and like I said, we've had a little failure to start there, almost back to where we started the other day. But I still, like I said, if we took it the other day, I can just tell you what I'm doing. I'm holding on to it, and it's part of being diversified too, not putting all your eggs in one basket. So for now, it still looks okay. And I will say this, still, or once again, offering another objective entry. If you missed it there, didn't want to chase it on the bounce, well, you're back to where you started and take it here with a stop somewhat below. I think I mentioned about a 3% upside from here, so you could use a 1% stop loss to give you a 3-to-1 risk reward ratio, 1% below where you buy it or below the support, or you can use a smaller RR. If you use a 0.75, 3/4% stop above where you buy it, below that support, I should say, then and you're targeting 3% to the upside, now you're talking an even better risk reward ratio. So that's just kind of near-term stuff, and I think, unless you're new to the site, my longer term outlook on gold is bullish. But what I've been talking about for a long time, I'm waiting, still awaiting the next buy signal, and that is a break on the euro US dollar above this long-term downtrend line. And let me color it up here because it's, to me, very, very significant there. We'll make it blue. There it is, stands out. So we hit that level back here. At that point, I started booking profits on all my gold and silver, long-term trade positions, long-term swing investing positions or trend positions, expecting reaction in gold, which we've had, and it's been now months here trading sideways. But that's it. So when we clearly take this out, solid weekly close, big green candle above there, above that recent high. This would be the next, in my opinion, the next major buy signal on gold, and that's where I'll be adding back a lot of swing or trend, I should say, long-term positions, trend positions. And then, of course, GLD. I know a lot of you don't trade futures, so I do always try to do my best to update the ETFs. Here it is. That was that overshoot. That was a long term. This was a resistance zone right here, this whole shaded area. Why? Because that was the top from the last bull market in gold. The very top right there, the top of the resistance zone. And then we came up after that bull market ended. We had 3 checks of the bottom of the resistance zone, about 174. And so that was also, it wasn't just the fact that euro US dollar hit resistance, it was the fact gold ran into major resistance too, which is why started closing out those long-term positions. And it's been more of a correction in time. We definitely corrected in price, but gold's kind of held its own. And I just wanted to point out it's at a pretty important support level, the bottom of that zone, which is again about a little shy of 174. Holding that level is a trend line that's being cracked slightly. I'm going to pull this level down, make sure we have it correct. Yeah, that's about where it should be. We're just a hair below it, so I'm really looking more at that level there. So that's long-term stuff. And look, gold could break it. It's certainly possible. We're still in correction mode after that big bull run into resistance, with the euro US dollar still yet to break out, and still at long-term downtrend line resistance. So should gold break much below these recent lows, both on that 60-minute chart I just showed you, as well as this weekly chart here. Weekly chart shows me that next support doesn't come in until about 164.80 on GLD. So that's a possibility, or maybe the correction's over. I don't know, but I'm going to have a lot more confidence if and when both the euro US dollar break out well above those recent highs, as well as gold. When gold does this and the euro US dollar confirms, then that's my next long-term buy signal on gold. Daily chart, there's that about 173.80 right there. So this is support, and that's the end of the day. Here's if you want to buy gold, subjective, go long at support with a stop somewhat below. If you're a gold bear, I wouldn't short it right now. I'd wait for a break of the recent lows. And there's your potential targets on the daily chart. And last but not least, UNG or natural gas. This is the ETN. This is probably your best bet. Those leverage ETNs that used to be out there, the 3-time, they blew up. This one's non-leveraged. It's been around forever, so this is the one I'll use for the ETN proxy. Support, 1090. Support right here, held, hit support, bounced so far. Big old gap right here. Resistance, support. So it's a pretty big level. There's a case on the daily chart to step in and buy natural gas with a stop somewhat below those recent lows. Like always, give it a little bit of room. If you see support at 1090, you don't want to stop at 1089. I'll guarantee you they're going to run your stop and take you out, and that's what happened there. A little brief dip below. So a little bit, a little bit all depends on how volatile security is. Natural gas is very volatile. You might want to use a 5-6% plus stop below that level, because the swings in natural gas are not 5, 6, 7%. They are 20%. They are from the bottom there to the run up there, 63%. Natural gas is one of, if not the most volatile commodities out there. So if you're swinging it, you're swinging usually for high double-digit, sometimes triple-digit gains, and as such, you need to use wider stops and, in my opinion, smaller position sizes to account for that excessive volatility, because most people aren't comfortable with 10 to 20% stop loss orders. But that's sometimes what you need to successfully swing or trend trade natural gas and not get shaken out within the trend on the pullbacks, because they're going to be above average. All right, next up would be, and final chart would be the natural gas futures. NG. All right, I've covered this quite a bit recently. We had a nice bullish falling wedge back here, divergent low, breakout, back test. We're moving up, moving up. I said watch this trend line. Break of the trend line would be bearish. We put in a divergent high, aka bearish rising wedge right there. And there was your sell signal. We took out both the trend line and this very, very well-defined 3195 support level at the same time. If that's not a good sell signal, I don't know what is. So it was a very objective level to have a stop below if you were trading this trend long. And since then, we corrected. And we came all the way down to this 2898 support, broke it briefly. That was that little dip I just showed you on the UNG daily candle, but then snapped back above it. Once we snap back above it, that's bullish for two reasons. Well, number one, we regained support. And the fact that we briefly broke it and then regained it is even more bullish because that's a potential bear trap. What a bear trap is when support's broken, shorts or bears pile in, they short it, and then once you recover, they realize they're wrong. And if it continues to move up from here, they're going to be, more and more of those shorts will be stopped out. And then when you're stopped out, when you're short a security, whether it's a stock or a futures contract, to close it out and cut your losses, you're buying it back. You short something, you're shorting shares you don't own. When you cover your short position, you're buying it. So that short covering puts buying pressure on a security. And so this would be, my projected target and path for nat gas. Come up to this 195 target, and then hit the, the rest of the targets I laid out earlier. So I do think, make it very simple. Here's an objective long since we regained that with a stop. It's volatile, so you might want to stop below those recent lows. We might get a little minor uptrend line here working, so you can watch that by pullbacks to that trend line. And also, finally to note, we put in a divergent low at that recent low. So there's quite a bit of, I like natural gas. That's it. I think time to re-enter back. And I think I said that ahead of time. If we fall down to that 2898-ish level, that would be, depending on how the charts look, an objective long entry. The fact we had positive divergence, then we broke out of the downtrend line. At the same time, we recovered that 2898 level. Check marks for me. So bullish nat gas right now. Just laid out the targets. That's it. All right, let me get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.